Hello everyone, my name is Joshua Aura. I teach ACCA, CPA and ATD at Regional Center of Management, Nairobi. Today I would want us to look at consolidated financial statements in F3 ACCA or Section 3 FR CPA. Now to consolidate is to combine, is to put together financial statements of related entities. To help us contextualize everything, I would want us to look at Chapter 24 of the BPP, Consolidated Financial Statements, specifically question number 24.1. We are told on 1st January 2010, Alpha Company purchased 90,000 ordinary shares of $1 shares in Beta Company for $270,000. At that date, Beta Company's retained earnings amounted to 90,000 and the fair values of Beta Company assets at acquisition were equal to their book values. 3 years later, on 31st December 2012, the statements of financial position of the two companies were, you can see the statement of Alpha and the Beta Company there. So we are told that the share capital of Beta Company has remained unchanged since 1st January 2010. The fair value of non-controlling interests at acquisition was 42,000. The key thing there is the share capital, which I would want to draw your attention to. The share capital, we are told we have got ordinary shares of $1 each. So the par value is $1. And specifically, I would want you to see the number of shares, ordinary shares of Beta Company. The number of shares, ordinary shares of Beta Company there will be 100,000. And we are told that Alpha, out of the 100,000 that Beta has, Alpha acquired 90,000. So the group structure. So group structure, we have our Alpha, we have our Beta here, and the Beta we purchased 90%. That is 90,000 shares out of the 100,000 shares that Beta has. So 90,000 over 100,000 times 100 gives us 90%. So that automatically tells us that Beta is a subsidiary. Beta being a subsidiary, I will be interested on the date that we acquired, the date of acquisition. We are told we acquired this in 1st of January 2010. And then I'm interested in the date of the financial statements. The financial statements given there are of 31st December 2012. You can see during the financial year, during our financial year, which is ending on 31st December 2012, we were with this subsidiary for the whole year. Because since we bought the subsidiary, we have stayed with it for 3 years. So I'm interested in the number of months that we stayed with this subsidiary in our financial year. We stayed with this subsidiary for a whole year, that is 12 over 12. Meaning that we shall not be prorating the income statement parameters of the subsidiary. If, for example, in the year of our financial statements, we stayed with this subsidiary, say, for 6 months, then all the subsidiaries' financial statement parameters, especially income statement, would have been prorated by multiplying them with 6 over 12. Now listen to me. Look at the question that they want there. The first question, which is 24.1. What amount should appear in the group's consolidated statement of financial position at 31st December 2012 for goodwill? For goodwill. That's a very easy question. So goodwill calculation, goodwill computation. So goodwill computation, basically, we are looking at the considerations that we gave out to acquire this subsidiary. So we have the consideration paid by parent, that is Alpha, paid by the parent, that is Alpha, paid by Alpha, the parent. To acquire Beta, we are told that the parent here called Alpha, the parent called Alpha gave out 270,000 shillings, $270,000, sorry. And then we never bought 100% ourselves. No, we only bought 90%. meaning that there is another party that came and acquired this 10%. We normally call this smaller party the minority or non-controlling interest. So we have here consideration paid by NCI, non-controlling interest, the minority interest, the ones who have got a smaller percentage. Now basically here we shall look at their fair value at the date of acquisition. Down there we are told that the share capital of Beta Company has maintained unchanged since 1st January 2010, and the fair value of NCI at acquisition was 42,000. So this was 42,000. So come and give us the total consideration. This will come to 000. We have here 300. It's important we use our calculator. Very good to always rely on our calculator. So we have here 270 plus 42, which gives us 312,000 like that. So that is the total consideration that we paid for us to acquire this subsidiary. What did we get in return? So come and give us the net assets of the subsidiary, as measured in the subsidiary's share capital and basically reserves. Very good. So the net assets. So give us the share capital of the subsidiary at the date of acquisition. Remember, these are net assets of the subsidiary. So of the subsidiary, what is the share capital? The share capital of this subsidiary which existed at the date of acquisition. If you are able to look at your statement very well, you can see that at the date of acquisition, we have a column there for Beta, which gives us a share capital of 100,000. Now listen to me, net assets, I'll have to come and look at the retained earnings at acquisition. Retained earnings at acquisition. At acquisition, retained earnings, we've been told up there, at that date, the date of acquisition, Beta's retained earnings amounted to 90,000. So retained earnings at acquisition here were 90,000. Now here, we do not have anything to do with any revaluations, that is fair value adjustment of the subsidiaries assets at acquisition, basically nothing much. So what do? Come and subtract these net assets from the total consideration which was paid for you to give us the goodwill, at the date of acquisition. So what do we have? Somebody there? I'm going to my calculator. I have 312 minus 100 minus 90. Minus 100 minus 90, which gives me 122,000 being the goodwill at the date of acquisition. If the examiner gave us anything to do with impairment, if he gave us a policy on impairment of goodwill, then we would have impaired. So here there is no impairment. So impairment of goodwill, there is no policy, so zero impairment. So come and give us the goodwill at the date of reporting. What we shall take to our SFP, Statement of Financial Position, is 122,000. And that is the answer. And if you look at Kinley, at the multiple choices given there, and that is why I love ACCA up to paper F9, they normally give us multiple choices. If you look at the multiple choices given, the correct answer there is supposed to be C. The correct answer is supposed to be C, 122,000, and that way you get your 2 marks. Ladies and gentlemen, you are getting all these free lectures from RCM, Regional Center of Management, which is the #1 accounting training institution in Kenya. We have just begun our block release. I want to take this opportunity to welcome all of you, and you'll be able to get what we call awesome lectures, which will ensure that you pass your exams round 1. We don't want round 2. Everything is round 1. God bless you.